Why every home buyer and seller should be afraid of wire fraud. When people buy and sell homes, they don't think that wiring money could be risky. They simply follow the instructions given to them by their real estate professionals. But sometimes, criminals get access to wiring instructions, and instead of a home buyer's money going towards a home deposit, down payment, or mortgage payoff, it's wired into a criminal's bank account. This is devastating for the buyers and sellers. I know because it happened to me and almost happened to a client. It shouldn't have, because there are simple measures that could have been taken to prevent the wire fraud. I'm going to share my painful lessons because I feel a deep sense of responsibility to make sure other home buyers and sellers don't become victims. This video is broken up into 3 parts. First, I'll tell you my story. Second, I'll set the stage for the crime by showing you what happens behind the scene as mortgage and title companies work on your transaction. And finally, I'll explain what the criminals do and how you can prevent them from stealing your money. So let's begin with my story. My wife Jody and I recently sold our house in Westfield, New Jersey. We moved to New Jersey in 2000 for an exciting job opportunity, and we chose Westfield because it had a great reputation. It was an easy commute to New York City, had a pedestrian-friendly downtown, top schools, and warm community. It was a perfect choice for us. When our youngest child left home for college in 2017, the real estate market was hot, and we decided we were ready for a change, so we listed our house. We sold it to a young couple who was looking for a nice home in a great neighborhood in a great town. They were like us 17 years ago. The closing was December 15th, 2017. I'm a real estate agent, and closings are a normal part of my job. This one was typical. At the end, the buyer was handed the house keys and the deed, the legal document that records a transfer and ownership. Jody and I received our proceeds. Everything went smoothly. We moved into a new apartment in the center of town, had a nice holiday and New Year's, and life was good. But then something weird happened on January 4th, 20 days after the sale. I received an alert from my bank that a January monthly mortgage payment was made for the house we just sold. Apparently, my automatic monthly mortgage payments were still active. $3,652.12 was transferred from my checking account to my mortgage account. Should I have notified my mortgage company to stop taking money from my checking account? But where did the money go? Why was there still a mortgage account? It didn't make sense. It was clearly a mistake. I called the mortgage company, and after 5 minutes of phone prompts, I spoke with a customer service rep who told me the bank had a record of sending me a loan payoff, but no record of the house being sold. I texted my real estate attorney, who's a business friend I've known for 10 years. He represented us in the transaction. New Jersey is one of a dozen states which uses attorneys in home sales. When he called me back and I explained what happened, he said, "Oh man, I hope this wasn't wire fraud." Well, it was. My mortgage was never paid. And as I write this, 6 months later, nothing has been resolved. How did this happen? How were the criminals able to steal the funds when so many highly experienced professionals and institutions were part of the transaction? What safeguards were in place or not in place? Who's at fault? I started looking into these questions for selfish reasons. The worst case scenario played out in my head. What if my bank says to me, "You haven't paid your mortgage in months. We are going to foreclose on the house. We know it's not your house, but we don't care. We need our money back." Having a foreclosure on my credit history would be a disaster. And what would this mean for the buyer? Would their family have to move out of their new house? Would they have to pay back their bank for the money they borrowed to buy the house? One problem cascaded into another. Things were a mess. I shared what happened with colleagues who work with me. I told other real estate agents. At closings, I told lawyers. and title company closing agents. Everyone had a similar reaction. Their jaws dropped, their eyes widened, and they looked at me in disbelief. They listened intently as I explained how the crime occurred. I asked them what they do to prevent wire fraud. Most shook their heads and sheepishly said, "Not enough." Now, wire fraud isn't new to real estate professionals. There are blog posts and magazine articles for real estate agents, lawyers, mortgage loan officers, and title company professionals. There are breakout sessions at trade conferences. Heck, there's even a wire fraud warning statement on email correspondences. Yet, wire fraud feels like a problem that only happens to others. Kind of like when a tragedy strikes a community and residents are interviewed by the news media. They express disbelief. I never thought this could happen here. Until it does. I started sharing my story with my clients. I wanted them to be careful about wiring money. However, I didn't want their sympathy, and I certainly didn't want to cross as a whining victim, so I stopped talking about it. A month later, I was with a client who was 2 days away from her closing. She said, "You won't believe what happened to me yesterday." She told me the details of how a criminal, posing as a title company employee, almost convinced her and her husband to wire their $230,000 down payment into the wrong bank account. Was that just a crazy coincidence that I was a victim and then 2 months later a client is almost victimized? Or is this a pervasive problem that's grossly underreported? I don't know. And after researching this, I don't think anyone really knows. I do know, however, buyers and sellers are unaware of the problem. Buying or selling a house is the largest financial transaction most people experience in their life. For buyers, their focus is saving for the down payment, qualifying for a mortgage, finding the right house, getting through the inspection, and moving. For sellers, it's getting their house ready to be sold, listing their home, finding a qualified buyer, negotiating a good price and terms. Buyers want a house, and sellers want their money. They leave the actual transfer of the property title for the money to the professionals, the real estate agents, a title company, banks, and lawyers. But here's an ugly industry secret that I want to share with you, and it's why I made this video. Real estate professionals are being outsmarted by criminals. Now, I'm not suggesting buying a house without using professionals. You need them. But I implore you, do not assume your money will be wired into the right bank account. Sometimes it isn't. You do not want to be a victim of wire fraud like me and others to the tune of over $5.3 billion. Let's now take a look at what happens behind the scene as mortgage and title companies work on your transaction. Now, this is important for two reasons. Once you understand the process, you'll be able to protect yourself from being a wire fraud victim. Also, there are a lot of people in different departments working on your loan and the title. They want everything to go smoothly, but it may not seem that way when you're being bombarded with requests for documents or asked to sign disclosures. Understanding the timeline and each person's role will make buying or selling a home less stressful. Getting a mortgage and closing on a house. The mortgage process seems complicated because it's something most people go through only a few times in their life. However, it's pretty simple when it's broken down. Let's start at the beginning of the transaction when the buyer meets their mortgage loan officer. Or at some banks, they're called the loan originator. Essentially, it's the person who sold the loan. The loan officer talks with buyers about the lender's mortgage products and gathers some basic financial information. This includes a review of credit, income, debts, and assets. They'll also ask the buyer to sign Tax Form 4506T. This is an IRS form that gives the bank permission to receive transcripts of a borrower's tax returns. If the borrower meets the bank's initial lending criteria, the bank will prepare a loan pre-approval. Armed with the loan pre-approval, a buyer can submit an offer on a house. Once an offer is accepted, The buyer sends the signed contract to the mortgage loan officer. The loan officer prepares an application and the loan process begins. The loan processor will order an appraisal and tax transcripts. They'll verify the borrower's employment and income and check that the house is insured. The loan processor will also look at the preliminary title commitment. It will reveal any judgments against the property or outstanding liens. The most common lien is the mortgage. They will receive wiring instructions from the title company. It tells the lender where to send the money during the closing. The loan processor also serves as a liaison by communicating with other parties in the transaction. The borrower, title company, attorneys in an attorney review state, real estate agents, and other mortgage company folks, especially those in the underwriting department. The loan underwriter is an important person in the loan approval process. The underwriter needs to make sure that the borrower and the house meet the mortgage requirements. Essentially, they answer a really important question. Will the borrower repay the loan? The underwriter looks at how much money the borrower will put down toward a house, their credit history, salary, other income, debt, and cash reserves. Underwriters know that the most reliable borrowers have strong cash reserves and not a lot of debt compared to their income. However, even if a lender is super confident that the borrower will repay their monthly mortgage, a loan of this size needs to be secured with collateral. And that, of course, is the house. The value of the house is set by the appraiser, and the loan amount will be based on the appraisal or the sale price, whichever is lower. So if the house is good and borrower is strong, the underwriter will issue a loan commitment. Their work is done. The loan package goes back to the loan processor. The processor makes sure all the conditions are met before issuing the bank's final approval. They'll take a look at the appraisal, the property insurance, and the title to make sure the borrower is still employed and recheck the borrower's credit. If everything is cool, they'll issue a clear to close, and the borrower's loan package makes its final journey to the closing department. The closing department starts work on the closing disclosures and key documents like the promissory note and mortgage. The note is the legal agreement with the bank saying it's lending money at a certain interest rate for a specific period of time. The mortgage also recites the loan amount and interest rate, but adds that the lender has title to the property or a lien against it until it's paid. So that's it. That's how your mortgage loan application becomes a mortgage. Meanwhile, the title company is doing its thing. Think of the title company as an independent party. They don't serve or favor the buyer over the seller. Essentially, they are the combined agent for all parties: the buyer, the seller, the mortgage lender, and the title insurance company. Title companies do 5 things. They review and clear title. They issue title insurance policies. They facilitate closings. They receive and disperse funds. And they file and record the paperwork at the county recorder's office. So let's look closely at each one. Review and clear title. What is title? Title is a bundle of rights a party owns in a piece of property. The title company will review the public records of the real estate being sold. They want to make sure the seller is the rightful owner. They look for anything that shows someone else might have a claim against the property. This could be outstanding mortgages, liens, unpaid property taxes, easements, restrictions, leases, encroachment on the property, like a neighbor's fence, and bankruptcy. If the seller had a bankruptcy, the title company will see if it was closed. If it wasn't, the bankruptcy trustee will need to approve the sale. The title company will work to clear title. They might order payoffs of loans, clear judgments, liens, and anything else. When the title company finishes its review, it will issue a title commitment. This is its promise to ensure the title is valid. Issue title insurance. Mortgage companies won't provide funds to a borrower without a title insurance policy. The policy ensures the title is valid. The buyer pays for the lender's policy. Now, don't confuse the title company with the title insurance company. They are different. The title company who is working on your transaction is an independent agent of the title insurance company, similar to your life insurance agent and life insurance company. But it's different because the title company does most of the underwriting and issues the policy. The insurance company receives the premium. The cost for the policy varies widely state to state. The range per $100,000 loan is from $175 to $900. So for a $500,000 loan, this translates to a cost between $875 and $4,500. In some states, the rates are set by law. Title insurance protects lenders against problems with the title. What about buyers? Well, there's also an owner's title insurance that a buyer can purchase. Unlike the lender's title insurance, it's not required, and 15% of buyers decide not to purchase this policy. However, if you're a buyer, I highly recommend it. In my wire fraud situation, the couple who purchased my house, they had an owner's policy, and they were able to file a claim against the title company. Facilitate the closing. The closing agent gets everything ready for the closing. They will determine how the balance should be paid on the existing mortgage. They will prepare a tax statement and settlement statement. Now, the title company's settlement statement is different than the lender's closing disclosure. The closing agent will scrutinize both documents and make sure the fees match. The title company will provide wiring instructions to make sure the money arrives at the title company on the closing day. Some title companies send out wiring instructions by email. This creates an opportunity for criminals to access account numbers and steal money. Tech-savvy title companies don't email wiring instructions. They require parties to log onto their secure web portal to get wiring instructions. However, once the party gets the wiring instructions, they may download the instructions as a PDF and email it, again creating a vulnerability. And we'll discuss this vulnerability to wire fraud in a few minutes. The title company is now ready to receive and distribute the money. The escrow officer, sometimes it's the same person as a closing agent, receives the down payment funds from the buyer and the loan from the lender. The money is deposited into an escrow account and is held there for closing. The escrow officer also prepares instructions where to send the money and how. Some of it may be by wire transfer, some by check. Meanwhile, the seller signs the deed and turns that over to the escrow officer. Everything is in place for the big day, the closing. The title company is represented at closing by a settlement agent, sometimes called a signing agent, or simply the notary. They'll bring a big stack of documents to the closing. It will include the settlement statement, closing disclosure, the deed, the promissory note, tax documents, and a lot of loan documents. Most buyers and sellers are surprised at how many documents need to be signed and how long it takes. The settlement agent will explain each document, ensure everything is signed, and collect additional closing costs. The documents are scanned and emailed to the bank's closing department. The bank makes sure the documents were properly signed. Some banks look at the key documents. Other banks look through the entire package. So this can take anywhere from 10 minutes to several hours. Sometimes the title company has to call several parties at the bank to get the documents reviewed. Once the bank is satisfied, they tell the title company to disperse the funds. The title company wires the money and delivers checks. Everyone is paid. The seller, the seller's mortgage lender, the title company, the real estate brokerage companies, and the lawyers. The buyers get the deed to their house and they're handed the keys. The closing is over and everyone is happy. The title company, however, has more work to do. File and record paperwork. Within a day or two of closing, the title company will submit the deed and mortgage to the county to be recorded. This is a legal formality that provides notice to the world that the property has a new owner and a new lender with a lien. How long it takes to record the deed and mortgage depend upon the county. Some counties are efficient and will record within hours. Others still use a paper system and may take weeks. After the county records the documents, they will send either a hard copy or confirmation of receipt to the title company. When the deed and mortgage are recorded, the title company issues the final title insurance policy. So we officially have a new owner and a new lender. But we're not done. The seller's mortgage company still has a lien on the house. Releasing the mortgage may take several weeks. Here's why. When the seller's bank receives their money at closing, they process the payment and begin closing out the loan. The bank will write a refund check to the seller for the money in the seller's escrow account. This was money that the seller paid in advance for the homeowner's insurance and property taxes. The bank then prepares a release of mortgage and sends it to the county to be recorded. Once this is recorded, the buyer's lender moves up to the first lien position and their loan is now secure. So that's it. That's how real estate closings work. Now let's see how criminals get into the middle of the process and steal the money. If I was a bad guy in a faraway country with computer hacking skills, I'd look at real estate transactions in the U.S. as a dream come true. Here's what I'd see. As many as a dozen people involved in the transaction. There are usually 2 buyers, 2 sellers, 2 lawyers in the states that use lawyers, paralegals, assistants in the law firms, 2 real estate agents, assistants at the real estate brokerages, mortgage loan originators, their assistants, loan processors, title company closing agents, settlement agent, and an escrow agent. Many of the parties work in small companies or on their own. They don't have a sophisticated IT department looking over their shoulder, making sure their websites and emails are safe from hackers. I'd also see real estate professionals who are super busy and often distracted. They work with a lot of clients and are driven to close as many deals as possible. They work on volume. The more closings they do, the more money they make. And as the closing nears, the pressure builds. There's an onslaught of emails, questions about the disclosures, fees, and credits. Where's the closing taking place? What time will it be? Will it be delayed? Which documents weren't signed? What new documents need to be signed? Where are the wiring instructions? Many of the emails CC everyone. Some have attachments. It's hard to keep track. In short, it feels like a mad rush to the finish line and emotions run high. Buying and selling a house is a major life event. People are excited, they're anxious, they're nervous, they're worried, they're afraid, they're impatient. It's frenetic. And this is when the criminals strike. The criminals have hacked into one of the parties' emails and have been monitoring the emails, reading and waiting for the perfect moment. And this is it. A dozen distracted people, plus sending a lot of emails, plus urgency to close on time. And the criminals are looking for one particular email, the wiring instructions. When they see it, they'll download it, delete the bank account number from it, and replace it with their bank account, and they send it back out. They'll send it from an email that looks really similar to the real party's email address. And if the reader is looking at the email on the phone, it's unlikely they're going to see the full email address. The email may say, "Hey David, congratulations on closing on your new home. You'll be closing on whatever the real date is, at the real time, at the real address. Please see the attached updated wiring instructions." If David is duped and wires his money into the criminal's account, it vanishes pretty quickly. Some banks require a 24-hour hold, others don't. The money could be transferred into a foreign bank account, then withdrawn and moved into another. Within a few days, it could bounce around the world well before any of the parties in the real estate transaction even suspect that there might have been a problem. If you are wondering how the criminals get access to the unsecured email accounts, it's not that hard. It's called phishing. Hackers create fake login web pages and steal users' names and passwords. They target real estate agents, attorneys, title professionals, even buyers and sellers. Remember, most of these folks are using personal email accounts, not corporate email addresses that have layers of IT security. The criminals are smart. Here's how they stole $239,290.23 when I sold my house. Normally the buyer is targeted, but in my case, I was the seller. Several days before the closing, my attorney asked me to contact my bank to get a mortgage payoff letter. I got the letter, which contained the mortgage balance, the closing date, the names of my account, my wife and I, my mortgage account number, and the wiring instructions. I sent it as a PDF attachment to my attorney. He then sent it to the closing agent. Now here's where the facts get murky. I don't know how the criminals accessed the payoff letter, but I know they sent an adulterated wiring instruction to the title company. The new wiring instructions had the same bank and identified my wife and me as the account holders. However, they changed the bank account number and the bank address. The title company prepared the wire based on the fraudulent wiring instructions. At closing, the title company wired $239,290.23 into the criminal's bank account. No one verified that the account number on the wiring instructions matched my name. Not my attorney, not the title company, not my bank. No one knew this criminal act took place until I discovered it 20 days after closing. That's crazy. Earlier, I mentioned that wire fraud was almost perpetrated against a client. Their scenario was more common. 2 days before closing, they received several emails from a criminal posing as their closing agent. The fake emails instructed my client to use updated wiring instructions and explain the wiring needed to occur a day before originally scheduled. My client called her husband at work and said he needed to leave the office and go to their bank. He had to wire their $225,000 down payment immediately. Otherwise, they wouldn't close on time. He went to the bank and he filled out the form to wire the money. But moments before handing it to the bank teller, she called him and asked him to wait. She said she wanted to check the account number on the wiring instructions against the earlier wiring instructions she received from the title company. It didn't match, and they didn't lose their down payment. Now, the reason she hesitated was because she's an accountant, and she periodically sends international wire transfers, so she was educated. She knew about it, and she decided to be cautious. Nevertheless, it was a really close call. During my client's closing, I felt a mixture of emotions. I was relieved my client skirted being victimized, and I felt horribly guilty for not having warned them, given my experience. I also had wondered about the prevalence of the problem. I was a victim, and a client came close to becoming one. Was this just a weird coincidence? Or was I the poor sap who got struck by lightning twice? I wondered how many closings didn't occur that day around the country because buyers wired their money into the wrong account. And how many sellers like me would discover after the closing that their mortgage wasn't paid off. The wire fraud stats from the FBI are frightening. In 2017, $969 million was diverted or attempted to be diverted to criminally controlled accounts. The average fraud amount is $129,427. How can this problem be solved? Well, there's a potential regulatory fix. Require banks to match the account number to the account holder before clearing a wire transfer. This would have prevented what happened to me and almost happened to my client. However, changing regulations of any industry, especially a powerful industry like banking, is a long-term lobbying effort. Until then, buyers and sellers need to protect themselves. If you are a buyer, here's what you can do. Whenever you receive wiring instructions by email, check the sender's email address. If it's not the same address from an earlier email, or if it's the first time you're receiving an email from this person, be suspicious. Call the company that you know should be sending you the wiring instructions and speak to the sender. Make sure you call the correct number and not the number on the suspicious email. Use the number on a business card or look it up on the company's website. When you speak to the person you know is the right person to be sending you wiring instructions, ask them if they sent the email. If they did send it, read them the wiring instructions, verify the account number and the name on the account and the amount to be wired. If the email isn't from them, if it's an attempt to steal your money, tell the title company, tell your lender, tell your real estate agent, lawyer, and report it to the FBI by going to www.ic3.gov. This is the FBI's Internet Crime Reporting Center. If you need to respond to their email, don't hit reply. Instead, hit forward and write the person's known email address. After the money is wired, call the receiving party to verify the money was received. If it wasn't received, it's important to report it immediately. There's a very small window of time that a bank has to freeze or recall a wire transfer. Choose a title company that takes measures to avoid wire fraud. Tech-savvy title companies do not accept wiring instructions by email. All wiring instructions are entered directly into a secure portal. Pay the old-fashioned way. Use paper. Pay your deposit and down payment by a bank check. Purchase an owner's title insurance policy. This adds a layer of protection on top of the mandatory lender's title insurance policy. If you're a seller, you also need to be vigilant. When you receive a payoff letter from your mortgage lender, it will contain wiring instructions. Before you send this to your attorney or title company, call the person you're sending it to. Verify their email address. Tell them to call you as soon as they receive it. When they call you, ask them to read aloud the wiring instructions. Pay special attention to the account holder's name, account number, amount on the wiring instructions, and bank address. Also, immediately after the closing, call your mortgage lender and verify they received the wire from the title company. These steps will help prevent criminals from stealing your money. I hope you found this video helpful and that you now have a better understanding of the mortgage and title process, and you now know what to do to avoid being a wire fraud victim. Thanks for watching.